Real estate trades week by week, and market activity also changes week by week. And I can tell you that the past week has certainly been very, very interesting given the news of the interest rate hike. Hello everyone and welcome back to my channel. In this video, I will break down the May 2023 real estate numbers as well as discuss the recent interest rate hike and how that impacts the real estate market moving forward. Hello, my name is Sid Sur from Sid Sur Real Estate, helping clients with buying, selling, leasing, investing, as well as platinum access to pre-construction condos. If this is your first time on this channel, please go ahead and subscribe for all things real estate. Okay, so let's dive into the numbers and take a look. The average price of across the GTA is now sitting at $1,196,101. Surprisingly, that's only a 1.2% difference from May of last year, which we'll discuss again in a second of how values have actually recovered over the last year. The average days on market is now sitting at 14 days, 2 weeks, which puts us at a crazy seller's market. Year over year, prices are up $157,000 since January of this year and $42,000 since last month. So month over month, prices have been increasing since January. And over the last 5 months, prices have gone up over $150,000. Now, as I've discussed in my past two market update videos, it's no surprise that values have started to go up because buyer confidence has come back. Ever since the Bank of Canada announced the rate pause back in March, we saw consumer confidence skyrocket. I'm talking buyers coming out in absolute relentless pursuit of homes because they'd been sitting in the trenches for so long, going crazy over all the rate hikes. However, listings were still very, very low, especially compared to year over year numbers. So there was not too much inventory out there for buyers to actually go pick up, which increased competition, which resulted in higher values. Now, year over year listings are still down 18.7%, but sales are actually up 24.7% from exactly 1 year ago. So supply is not enough to meet up with the demand, which again is largely why values have been continuing to go up. What's interesting to note is that all asset classes have pretty much now recovered 50% of the losses they had incurred over the 11th month period where the Bank of Canada did 8 consecutive rate hikes. So condos, townhouses, semis, and detached homes all have recovered over 50% of the losses they'd incurred since interest rates started going up back in March of 2022. We know that especially around that November, December time of 2022, prices were at an all-time low compared to the peak of the market, which was February and March of 2022. And just after the January announcement where the Bank of Canada did a modest 25 basis point increase, we slowly started seeing people coming out. Now look, largely a lot of the activity that's been happening over the last 2 months, just besides interest rate pause, is also due to the fact that spring is typically a busy time in real estate. So of course, a lot of factors went in there that really resulted in the values going up so much. I've noticed it in our own listings, whether they be condos, semis, townhouses, detached, we're getting multiple offers on every property type. Now, 2 days ago on June 7th, the Bank of Canada did raise their key interest rate by another 25 basis points. And they did that because inflation ticked up to 4.4% in April, and the Bank of Canada has realized that consumer spending is still resilient, the job market is still strong, the labor market is still strong. This was the first increase in inflation in the past 10 months. Inflation had been slowly ticking down, and then in April came up, which is why the bank decided to increase the key interest rates. So the Bank of Canada is naturally trying to slow down the economy so that they can bring inflation back down to the numbers that they want, which is around 2 to 3%. So what does this recent news of the interest rate hike mean for real estate moving forward going into the summer months? Real estate trades week by week, and market activity also changes week by week. And I can tell you that the past week has certainly been very, very interesting given the news of the interest rate hike. We've seen a slowdown in showings of our own listings just over the past week. In our office alone, showings were cut by almost half, and so were the number of offers that we were getting on our listings. Buyers that I'm talking to every day, I'm getting the same sense that I was getting back when interest rates were going up, which is that they're again starting to feel that sense of uncertainty. Buyers tend to buy when other people are buying. Buyers like to be confident. They like to be certain when they're entering the market because it makes sense. You're buying something that's worth at least now, condos are now worth $500,000. You can't get anything cheaper than that. And the average price is over $1 million. So it's a huge investment. So of course, the natural psychology of a buyer is to have more certainty, to have more confidence. And any kind of news, whether it's interest rates or the elections coming around the corner, none of that helps. And I'm starting to feel that sense of certainty from some seller clients as well. They're asking me whether or not this is the right time to sell. Listings are now sitting on the market for slightly longer than they were a few weeks ago. So it's no surprise that we are going to see a slowdown in activity, particularly also given the fact that we are going into the summer months, which seasonally have been a very slow time in real estate. So personally, I think we are going to see a bit of a slowdown in the markets going into the summer months of July and August, mostly because it's the summer months. People don't really like to trade in real estate in the summer. They would rather go outside and spend time outdoors or travel. Having said that, I don't think we're going to see any sort of drop in values. I think values are more or less going to remain stagnant, especially given the fact that the number of new listings is still low. Supply is still low. Now, you might be asking, well, listen, how is this rise in interest rate going to affect people with variable mortgages or even fixed mortgages, people that have a 5-year fix from 2018, 2019 who are coming up for renewal this year and next year, where interest rates were pretty much, in half of what they got fixed 4 to 5 years ago. I personally don't think that people are really going to be defaulting on their mortgages for a number of reasons. Number one, yes, their monthly payments is going to go significantly higher out of pocket. They're probably down anywhere from $300 to $500 more than what they're used to paying. However, the Toronto and GTA real estate market has always been resilient. The sellers in the GTA traditionally don't like to panic sell, which we saw very strongly over the last 12 months since Bank of Canada started raising their interest rates. On top of that, the major banks are also working with their borrowers to extend amortizations in order to make sure that their monthly payments are down. I think before people decide to panic sell their properties, they will likely offload other assets or things like luxury items like watches or cars. They would probably get rid of those things first before they start panic selling real estate. Maybe they'll sell off some investment properties before they sell their principal residence. I am curious to know what you guys think of where the real estate market is heading for the remainder of 2023 and what you think the recent announcement of the interest rate is going to have an impact on the market. As always, guys, if you found any value from this video, please go ahead and hit that like button. And of course, don't forget to subscribe. Until next time, take care.